Hi, it's Michael Cooper. I'm with the Private to IPO Partnership Network, and we are taking a look at and listening to CEOs who are leading their companies from the private sphere to an exit strategy. These are companies that are top-notch, gold standard in their industries, and know what it takes to grow their company to a successful exit. And this afternoon, we'd like to welcome Barry Clapp of Centage. Barry, you have a very interesting background in history in developing companies, helping on the sales end, worldwide distribution, and acting as president and CEO of at least one company, which you then sold to a larger company in a very successful transaction.
Right.
How did you come about to join Centage, and what stage of development was the company in when you got involved?
Yes. Just before coming to Centage, I had been doing sort of strategic development consulting for various companies around the Boston area mostly. I had had some success in the past in helping put the strategy together to grow businesses or portions of other businesses fairly dramatically. And so it was helping people with putting together strategies, corporate strategies to try to grow the business, and was connected to a lot of the VCs and a lot of the infrastructure of lawyers and accountants, who support the early stage fast growth companies around the Boston area. So one of those connections, one of my acquaintances that I knew about Centage, knew that it was a diamond in the rough, a small company that had potential to grow a lot faster. He was actually on the board of advisors of the company, and he mentioned it to me, and I was kind of at the time seeking maybe some place that I could dedicate more specific time to, more dedicated time, and so I met the original two founders of the company, and they had an idea that the company could grow a lot faster than it had been doing, so I decided to join the company and grow it.
And of course, you are in the budgeting and forecasting software, business software market. It's a large, highly competitive market. What did you see in the product or the Budget Maestro? I don't know if you called it that at that time, but what did you see in the company that said, aha, we can really start to drive some rapid growth with this company?
Right. So the first thing I saw was that, as you say, it's a large market. I like to tell folks that every company budgets, right? So it's one of the few software applications that's needed by every single company in the country or in the world. And something like, at the time, 80%, and I think it's still over 70% of companies still use Excel to do budgeting. So there was a huge greenfield, untapped market of companies that hadn't moved to sophisticated budgeting systems. So right away, I just saw a huge greenfield of if all the competitors just kept getting the same market share and the company started, adopting the technology more, there was room for everybody to grow. The other thing was that Centage focuses on small to medium-sized businesses, and I've always been impressed with companies that can figure out a way to market into that space. It's a hard space to market into. It's challenging to find the buyers to sell into that market. So I thought that was an interesting puzzle, that if we could solve it, if we could figure out a way to get to the small to medium-sized business better than our competition, that we could sell more business. And then Budget Maestro just happens to have a really unique and distinctive positioning. So as you said, it's a crowded market. There are probably, 10 or more companies in this space, but Budget Maestro is the only one that builds a budget in the way that we do, and that's primarily with pre-built modules. It's a system that automates the creation of your budget model, where others are more like Excel and give you a platform to program your budget and to program the cells and to define, how your budget is, budget structure is. We actually talk directly to the back office general ledger system and automatically create a budget model that replicates that general ledger system with pre-built code that we reuse, that's been proven, that's GAAP compliant,
Hmm.
and we generate the budget model for folks automatically, and it's easier for them to maintain as a result of that as well. So the Budget Maestro for the small to medium-sized business had the ability to automate the creation of the budget model, which none of the other competitors really had that capability.
Now, when IFS came into play, and I don't know if the U.S. uses IFS as much as the rest of the world, but did
No,
that?
no, IFSR is mostly a European
Okay, so you did.
standard, so it's all gap
Yeah.
compliancy that we seek here.
So you were absolutely right in your assessment, and the company has been growing quite rapidly. And you recently completed a $13.5 million Series A round with
Hmm.
TVC Capital, a well-established VC fund, and Northgate Capital, a
Yep.
multi-billion dollar fund. When you were out seeking funds, did you purposely target different sized backers with the thought that they could bring different advantages to the table for you?
Not really. We actually were not seeking funding at the time. TVC found us. They're more of a growth equity fund, than a VC. So they were seeking established companies that were profitable, that were already successful in a particular space, but a space that had huge upside, like our space does. And so they were researching and seeking people in this space. They heard of us. We fit their sweet spot. They, at the time, I'm not sure exactly what their portfolio is today, but they liked $5 to $10 million type companies that had the potential to grow. And so we fit their profile. And we had a great reputation for a company of our size. We had a great reputation. The brand does in the marketplace after having been doing it already for 13 years. So as a result of it, they looked at a few different players, and we were one of them. I think from a price, performance, and investment basis, we fit the criteria, and then they bought into our story, which is that we had a great foundation, but we're underfunded. They in turn brought Northgate Capital in, so we didn't bring Northgate in. Northgate is a fund of funds and is an investor in TVC, but in this particular case, they also took a direct position in the company as well, and that was arranged by TVC. We're thankful.
Okay. Now, you've got two directors on your board, Jeb Spencer of TVC Capital and Jared Stone of Northgate.
Yep.
Each one of them have tremendous experience in M&A transactions and successful exits, as do you and a couple other people on your team. But from
Yep.
what I can see, part of your overall strategy might be to position the company for as an IPO candidate or a takeover target. Was that kind of strategy driven by your financial partners, or was it coming from your existing board of directors, or did everyone kind of just see eye to eye on that, and everybody had kind of a common goal
Right.
to build something that could be sold? Or
My feeling has always been you try to build the value of the company, right? Whatever the outcome is going to be. If there's a company that's large and growing and profitable, is always going to have a value, and there's always going to be people interested in capitalizing on that value. And so I think from the beginning, even before those folks came in, the idea was to try to get the revenue line and profitability line growing in the company so that the company increased in value. So before they came along, we had done that. We had self-funded the company and got it on a growth track to the point where when they invested, it was at a valuation that was higher than when I first got involved in the company. And now, naturally, all of us, the board members, the Northgate, TVC, the original founders still have stakes in the business, and the employees. It's all to try to maximize the value, whether that's an IPO, which would be quite a ways in the future, but if we could ever achieve that, it'd be great, or whether it's an acquisition, or whether it's just throwing off profits. But naturally, the natural trajectory of a company like this is to build it and to be acquired. So I'd say we focus on trying to build the value of the company and revenues and profits, and take see what the market offers us as a result.
and you were hitting your stride. Your revenues were increased. They've been rapidly increasing for the past year, basically, or so. A little bit
And
more than
we've
that?
consistently, over the last 4 years, we've consistently grown, like first in the teens, and then in 20% range, and now and then 30, and now pushing 50% growth. So
Yes.
we've been on a trajectory of growth, but the percentage of growth increased dramatically once we got the capital to invest in the product and other things.
What does the future of Centage look like in terms of new products that you might be working on, new markets that you might be approaching?
Right. So the biggest impact that the investors had in the business is we were 100% an on-premise licensed software model, and we realized we needed to be in the cloud in order to succeed and to prosper and to drive the value of the business. Right. So the number one thing that TBC was interested in, and we were interested in as a result of working with them, was to transition the product from on-prem to cloud. So we've succeeded in doing that. We continue to improve our cloud platform. We still sell some on-premise software, but we're transitioning to what will be a SaaS model completely. So that required not only rewriting the product while maintaining all the base level DNA that gives us a distinction in the first place, but we also had to transition our business model from license sales up front to a subscription model, which requires cash, to sustain yourself as you build the customer acquisition. That's really the direction. Once we have transitioned to a full SaaS model, then we have additional products that we'll be introducing. Some components of our current product are functions that are sold with Budget Maestro, but we have a business intelligence analytics tool that could be sold separately against other data sources than Budget Maestro. So we'll be pushing that into the marketplace, and that should be a product of equal size and success to Budget Maestro, I would imagine. And then over time, we've established quite a sales and marketing machine to reach the SMB market. So we'll certainly be looking at other products to introduce, as well as potentially to acquire if we can find products that are undervalued but need access to the SMB marketing that we have. We would look in that direction as well.
And when you've moved into a cloud platform, has that opened up your flexibility to work with more partners on the development side, on the sales and marketing side, on any other strategic element of the company?
I would say mostly on the sales and marketing side. We've signed several tens of channel partners. We always had a small channel business, but coming out with the cloud version of it has definitely excited the marketplace, and it's been easier to find and sign channel sales partners. So we've added tens and tens of channel sales partners in that time.
Beautiful. Your performance to date has been outstanding, and you've got a beautiful product. So I look forward to continuing to watch the development of Centage. And if any of our channel partners that are taking a look at opportunities are well positioned, perhaps they'll reach out and speak with you.
Sounds great.
Thanks a lot for your time, Barry.
Very good. Thank you. Thanks for calling.
Okay, we'll talk to you soon.